Housing prices are now at an all-time high of $700,000 here in San Diego County. Wow. Chase Wilsey of Wilsey Asset Management with 3 ways that homeowners can take advantage of those prices. Chase, good morning.
Good morning. How you doing?
I'm doing well. Okay, everybody's been hearing about this over the past year and a half. Just how much are we talking about? How much have home prices gone up over the past year?
I mean, it's been pretty substantial. I mean, if you look at the national average, it's about 13%, but even just here in San Diego, we're up about 19%. So we've seen a pretty nice appreciation there, especially if you look at like the 20-year average on home prices. They average annually about 3.4%.
Yeah.
So we're well above that rate, and I mean, it's been a crazy market to say the least.
Wow. I'll tell you what, a lot of my friends, they were talking about, hey, you know what? I'm getting all these letters from real estate agents. They want to buy my house. They have clients who want to buy my house right now. Then they realize, wait, I have to stay in San Diego. If I sell my house at top dollar, I can't buy another house at top dollar. And there's a bunch of stuff to consider. So we're going to go through kind of 3 things, right?
Correct. And the first one I look at here to take advantage of these high home prices is you downsize, especially if you're near retirement age. And you're like, well, I'm going to downsize anyways in a couple of years, or hey, maybe the kids just left for college and now you're empty nesters. Well, let's downsize into a smaller house. The reason this is beneficial is even though, as you just said, you're selling high and still buying high, you may have excess equity that you could perhaps invest. You could also take out a mortgage on the new home and invest part of that money, which could grow, which I think that is going to be a higher rate than what home prices will grow at, let's say, over the next 20, 30 years. And the other thing to consider is, let's just say if you have $1 million home versus a $500,000 home. If you have a 10% pullback, well, 10% of 500,000 is a whole lot less than $1 million.
Wow. In terms of, you mentioned the retirees for downsizing. Is that the only group who should consider doing that? Would you consider, let's say you have a family of 4, you got a couple of kids, they're all in school in the neighborhood. Is that an option for them, just to take advantage of what their house is worth to maybe downsize, or is that not something that a family would do?
You know, I think there are better options that we'll discuss, but I think it could be right. It just depends on your family needs, because you'd hate to downsize. All of a sudden, it's like, wow, this is terrible. I can't stay with my kids anymore. And it's like, wow, now we need to sell this home and buy another one. Now you're having all kinds of problems.
Okay, let's talk about selling and renting, because other folks are saying, well, the rent is just about as high as it's ever been also.
Yeah, and it is an interesting point. And I'm not going to say, yeah, renting is super cheap. I mean, that's not true. But I do believe it is more cost efficient to rent in San Diego's market than to actually buy at this time. And to let you know, everyone in our office here at Wilsey Asset Management, we actually rent. Nobody in our office owns a home at this time. We just think it's too expensive.
Wow.
And the reason that I kind of look at this as well is we've seen this huge appreciation in home prices. People say, yes, rents have gone up as well, but not at 19%.
Wow.
And I think if you look at the political landscape of it, if you had rents increase 19%, I think people are going to start to get upset. I think Mayor Todd Gloria would not be happy with that. So I don't think you're going to see rents increase at the same rate that you've seen housing prices increase here in San Diego.
To what do you attribute this? Is it, I mean, obviously it has to have a connection with the pandemic.
Yeah, I mean, absolutely. I think there's a small portion of it that's really attributable to the pandemic, as people have kind of left the more downtown type centers and gone towards the suburban type areas. But really the ultimate impact of this comes from the supply-demand imbalance. I mean, there's very high demand for homes, but people just are not listing their homes on the market right now. And it's simple economics 101. If demand exceeds supply, that's what increases prices. And that's why I'm staying away from the housing market right now. I think once you have supply come back onto the market, I don't think demand's going to increase much further. Then prices should level off.
Okay, I know you touched on.
I want to point out.
Yeah, go ahead. Sorry.
Oh, I was going to say the big thing I want to point out too is housing prices don't always go up. If you look at the peak in 2006, housing prices are up just 32% today, even with this huge run-up we've had. So be careful. You don't want to buy when everybody else wants to buy and prices are high.
That's very, very smart and very good advice. I know you touched on this earlier, but my brain sometimes had trouble processing stuff like this with the 10% and the this percent. Cashing out refinance. I can never really get my mind around it. I need to hear it like 8 times, and my wife is good at it. I'm not. Explain that to me again and what you can do with that money.
Yeah, so cash out refinance, basically you're just taking money from that home asset and you're putting a mortgage back on it. Let's say you did pay off your home. Well, now you can take cash out of that asset and take a loan on it.
Sure.
And the reason this is beneficial is interest rates are still very, very low. Let's just use 3% as that metric. If you're able to take out a loan on 3% on that home and you invest those proceeds, basically you just have to do better than 3% over the life of the loan to make it a advantageous decision there. And the other thing I look at too is people sometimes have high credit card debt. Well, maybe you want to take out a loan against your home and do a cash out refinance, pay off that credit card debt, because I can tell you 3% is a whole heck of a lot less.
Yeah.
Let's say 20% on the credit cards.
Wow. That's a good point. Now, does that option only work for people who own their homes, or even if you still owe on your home, you can still do this?
Yeah, you can still tap some of that equity, but I will say be very cognizant of, the points that you're paying. Read the fine print. Very important. This option is not right for everyone. If you're thinking, hey, I'm going to do a cash out refinance and let the money sit in the bank for the next 20 years, don't do it. That's not going to help you at all.
Okay, good stuff. You know what? If you want to figure out which option is best for you, call somebody. Call Chase. He knows.
Give us a call. We'll be ready to help.
I appreciate the time and the explanation as always, Chase. Thank you.
Thanks for having me.
You got it. Coming up here on Fox.